Welcome to the NWR Communications Near-Term Producers Conference. My name is Kerry Stevenson, and up next we have Suvo Strategic Minerals. ASX code is SUV. Joining me today is their Executive Chairman, Henk Ludik, and we're going to be talking about their assets in WA and also the Patong asset in Victoria. Henk, great to see you. Very interesting time for the company. Over to you to tell our wonderful investor audience all about what you're up to.
Thank you, Kerry. It's an absolute privilege to be presenting our updated strategy post our capital raise. We recently raised $7.5 million for the upgraded Patong. But in addition to that, we've got an absolutely world-class portfolio of assets, and I'll work the way through it. So kicking off with the investment opportunity, which is Suvo Strategic Minerals. We've got a dual commodity focus. Kaolin and silica. These are premium assets in obviously a tier 1 jurisdiction. And we've seen a substantial growth in traditional markets, but also there's a number of green applications that we'll touch on today and get into that a little bit more. Obviously, we've been running the Patong operation, and not Suvo, but our predecessor as well. We've been running that for close to 50 years. So we've got the know-how. We've got the first mover advantage, and obviously we've got deep market knowledge and a proven track record of operating these assets. We have taken over the Patong asset probably about 18 months ago. Our teams managed to turn around production fairly quickly. We went from 19,000 tonnes per annum to 27,000 tonnes per annum. And that was done just through continuous improvement initiatives and obviously really hard work from our ops team, which we appreciate very much. And following the capital raise, obviously, we're going to increase that production to 60,000 tonnes, and we hope to commission that early 2023. A phenomenal story, phenomenal opportunity, and obviously we're sitting with a multi-decade resource there. And then it's quite encouraging.
Henk, sorry to interrupt you. How did you get your hands on Patong? Why did they let it go? So
Emery's pretty much shifted their focus from smaller assets into more, the bigger side of their business. And we were fortunate to be a miner with capability, skill, and network in the region. So it was a match made in heaven. We agreed to take over the asset and effectively continue producing into the book. They're still a key customer. It was absolutely just an absolute perfect match of requirement and skills at the time. So towards the end of the asset, obviously they didn't see the benefit of spending capital on the asset. It's fairly run down, fairly old. So when we stepped in, obviously we started spending the maintenance capital, started effectively looking at processes, the team, the requirements, and that's how we managed to get the production up without too much of a capital burn. So it's a really good story. It's a good story for Suvo, but it's also a really good story for the community. This asset has been in operation for 50 years. I've worked with a couple of the individuals who, these 2-3 generations of the mine, and this is part of their day-to-day life. And
wow,
we are building an asset which is going to continue that legacy. Then moving on, obviously we are delighted by the fact that the federal government's announced the addition of silicon onto the critical minerals list. We will be talking about our silica sand assets a little bit later, but we're also focusing on how we can use our current assets to produce commodities, which feeds into the decarbonization initiative, which is it's massive narrative globally, and we see a specific role that we want to play in that, in enabling the reduction targets set by industry, governments, and obviously responsible corporates. We've got a disciplined and experienced team. We had a bit of a change of the guard recently, still working through our process. There's a handover process going on with Rob Martin, the previous chair. And to ensure that it's seamless, we obviously have open lines of communication with each other. And we continue to engage on all the knowledge that Rob's built up in his time at Suvo. And at the same time, we are expanding that team and that capability set, because obviously we'll be looking at building new projects, but at the same time, we'll be looking at improving our current performance. And there's a specific skill set that we will need to support us through those various stages. And our strategic focus is quite simple. It's to expand production, it's to expand earnings, our market share, and then obviously through those things to grow our shareholder value. Needless to say, we've got a fairly disciplined capital management approach to date. As an ex-investment banker, I look at the balance sheet and I think maybe we can refine some of this further, and that's really an exciting opportunity as well, which could unlock near-term opportunities. And then obviously we've got one of the best portfolios of assets in Australia, tier 1 mining jurisdiction, and they absolutely play into the current narrative of the green economy. So I'm going to jump right into Patong. Patong is our kaolin project over in Victoria. It's been around for 50 years. It's absolutely a brilliant operation because, when it was designed back in the 70s and basically commissioned back then, it was absolutely the Rolls-Royce of plants in the sector. We have 3 operations feeding ore into the Patong plant. We have the current Patong operation, Patong mine. We have Trawalla mine and we have the Lolol mine. Now the Lolol mine is quite interesting because that produces a very high quality kaolin. Typically we sell that to the pharmaceutical market. Attracts a very attractive premium, and it's absolutely one of those commodities that we are blessed to have, and we see potential to potentially expand those resources. But we've got more than enough in the ground at the moment to last us for a couple of decades at current production rates. The Patong upgrade, obviously that's taking current production from 27,000 tonnes odd per annum to 60,000 tonnes per annum. Really excited about that because that will do a couple of things for us. We've got a fairly large component of fixed costs in our current operating cost stack. By expanding our production, obviously, we get a lot of benefit from that additional production going through the process. There's a lot of energy efficiencies, cost efficiencies, process efficiencies, so we hope to see that translate to bottom line. And something which is quite exciting, our order book from this operation has been fairly stagnant since we took it over from Emery's, and Emery's obviously set it up for a specific purpose. We now have the opportunity to produce products which goes into the green economy. You would have heard earlier today, metakaolin's becoming a topic, and rightly so. It's absolutely one of the low-hanging fruit opportunities for the sector to look at decarbonisation of our construction sector, and I'll touch on that a little bit later. And as soon as we push high volumes into that premium side of the offtake space, then obviously that's going to have a positive impact on our weighted average value of realised sales. So very interesting. And what's exciting is the previous team had the foresight to order the long lead items and just paid out of cash reserves last year. So happy to say that's a photo of the kit in Victoria, obviously being assembled at the moment and being tested. And from a filter press perspective, the equipment's there, the electrical systems are there, and we are pretty much in a position where we can pull the trigger on all of this and get this project built fairly quickly.
Henk, is how much of the the recent capital raise will be going into the upgrade at Patong?
We estimate circa 5 million will go into the upgrade at Patong. We may, in that process, obviously look at whether or not there's continuous improvement opportunities to save on that number. But once again, we've de-risked a large portion of that, so we don't expect that there's going to be material blowouts because the equipment's on site. We have effectively penned all the key contracts which are fixed cost, and if the stars align, then obviously we'll have more than enough to go by to build this plant. Then I think the metakaolin market and the kaolin market more specifically has been a fairly opaque market. It's not well understood. And the reason for that is obviously these assets typically sit within, or traditionally, I should say, within large multinationals. Now, we've been fortunate to obviously get our hands on the Patong asset. That gives us a blueprint for what we're going to do at Gabbin, which I'll touch on in a second. But it's also created a very good look into the world of kaolin and hydroskaolin specifically. Now, hydroskaolin produces a somewhat high quality product, which I'll speak to a bit later as well. So global supply is about 26.5 million tons, there or thereabouts, and there's potentially risk around that number because to date about 15% of that was produced in the Ukraine, and we know that there's political tensions and really serious issues there around that. And then we know that there's a number of operations, specifically in China, where they're coming to the end of life of mine and they've got some quality issues with declining grades. That's a fantastic opportunity for all the emerging producers and obviously for us during this expansion. Global demand, a really exciting story, 3.5% growth rate seen there on a per annual basis. Around about 30 million tons required, and you'll see about 50% of this goes in or comes from the high-risk kaolin market, purely because of that premium nature of the product. This breakdown of our book, excuse me, this is a breakdown of our 2021 book, which effectively gives you a flavor for the specific trademark products which we've been selling into this market for a number of years. And it doesn't make a lot of sense if you look at paints and cardboard, paper coating, ceramics, until you really take a look at who these buyers are. And they're big names. It's the Dulux of the world. It's really big New Farm Yates, which has a massive role to play in the agricultural sector. And then obviously the large internationals like, Bostik and Vizzies. So these are well-known names, and that gives us a couple of options. They are material and large consumers of our product. And obviously, they are very stable and predictable businesses. That basically gives us a comfort that if we produce product on spec, there will be a buyer for it, and these buyers have a relationship with us, and we can leverage that fairly easily. Now, the thematic around metakaolin, that's probably something you're going to get in the market fairly often, fairly quickly. Because there's an exciting opportunity around metakaolin. Cement production, as you would have heard today as well from some of the other presenters, is one of the world's biggest single industrial causes of carbon pollution, about 8% of.
Never knew.
You look at that and you go, wow, that's a big number, but it's only when you compare it to the global vehicle fleet or car fleet that you realize this is a massive opportunity for us to really consider how we deploy our resources and pretty much how we approach our construction industry. So metakaolin effectively is just kaolin flash calcite. It's a quick, a couple of seconds process. You dehydrate your kaolin and there's some structural changes. And this metakaolin then is used in cement as one of the pozzolanics, replacing something like a lime, for instance. And there are various mixes, various grades, and a number of parties in the market looking at pretty much at what the best mix and bang for buck product potentially is. And we're working with some of those as well. On the back of this, obviously, really glad that we've identified the opportunity to consider using some of this product from Patong. And basically calcine that, and we have had trial batches made in the past from the Patong material. So there's low-hanging fruit for us to potentially plug whatever we pull out of this new project into that sector of the market. But that's obviously subject to us going through due process and doing all the testing and suitability testing, and then obviously engaging with those substantial players in the market that will be looking at incorporating this as part of the production process. Obviously, when you have these type of assets producing a premium product, it's always encouraging to hear that the market is growing at double-digit rates, and we're going to look at numbers north of $50 billion US by 2027, which is just absolutely phenomenal. And with the current supply side constraints, that might potentially even be a low estimate, depending on how things play out in the near term. For parties interested, I would want to flag that there's a really good report that was completed by Zero Carbon Australia. It's called Rethinking Cement. We've added a link in the document, and I would encourage our viewers to go and have a look at that document. Really provides some really good context for this and the opportunity around it.
Where can they find that, Rethinking Cement?
It's the source number 1 at the bottom of the page. So if you click that link, feels like I'm a YouTuber, to be honest. Hit that link, like and subscribe.
Click that link, like, subscribe, and buy some shares.
Yeah, you can buy some shares.
Okay.
And you know, what really excites us about this opportunity is you'd look at the narrative around green cement and green opportunities and green market, and it sounds like a little bit of hogwash, to be honest. But then you look at what's happening, you know, in the global economy. Vicat, who's a large French cement manufacturer, purchased a green cement producer in 2019. Recently, they've announced that with FLSmidth, who's one of the leading players in the sector, they'll be using metakaolin to substitute some of the clinker in their traditional products. You know, and then you would expect that, all right, that's potentially something which happens in the developed markets. But good news, Oyak, who's a large Turkish industrial group, recently commissioned a plant in Ivory Coast, which shows you that demand's not constrained to the more progressive environmentally sensitive economies. There's certainly a bigger play there. And back at home, some of our progressive thinkers in the sector, you know, companies like Boral and others, have taken a very progressive approach to setting realistic targets, 2030, and then 2050, and then steps in between, to see how they intend to reduce the emissions in the sector as well. And that's really encouraging, because as opposed to making, you know, blanket net zero statements, they've really applied themselves to how they're going to achieve this. And obviously, looking at these green cements is a critical part of that mix. Now, no high-risk kaolin discussion would be complete without obviously mentioning one of the gems in our stable, which is Gabbin. Gabbin is 210 km from Perth, close to existing infrastructure, a multi-decade resource, and we're effectively pushing that into the feasibility or pre-feasibility phase of its development cycle. While we've obviously done the work on the scoping study now going into pre-feasibility, there's other work streams around this opportunity as well. So we've done test work on the actual material from the project to test for suitability in ceramics, paper, paint, cosmetics, and then obviously metakaolin. We are running an extensive study with FLSmidth on the suitability of our metakaolin from Gabbin. Now, I can't comment too much on that. We expect that the report on that will be available in due course, and hopefully in the short term. But we do expect that that's going to be a promising opportunity for us. And then obviously, as we've indicated in previous releases, we have an MOU in place for some of the ceramic grade products. It's important for us not to tie ourselves to one commodity. It's great to have flexibility in the system so that you can potentially diversify your offtake and thereby de-risk your supply chain and your sales. Then briefly into silica. I know we're almost running out of time, so I'll be quick on this one, but this is absolutely core. Once again, we were extremely encouraged by government's move to support this critical sector as well and put it on the critical metals list or minerals list. We see that's a great move by government. We understand why government's doing that, and we're engaging with government to ensure that we are working with them, cooperating with them, and obviously leaning into their skill set to help us develop these world-class assets. We have two silica sand assets. The first one, Nova, or the Eneabba project. It's effectively 100% owned by us. Scoping studies commenced. We have a multi-decade resource on the property in the inferred stage at the moment, and obviously we're doing work to attend to that. But it's once again, it's been selected with the purpose of producing in mind, obviously, and hence we are close to rail infrastructure, gas pipeline, and we only 150 km from the Geraldton port, which is fantastic. That's a project which could potentially be used to produce a number of traditional products, as we've indicated there, and you know, it's a foundry application, specialty glass, but then there's also an opportunity to look at emerging technologies such as thermal energy storage. Miche, that's an absolute gem of a project. Obviously, it's very early days, but we believe that that's one of the best high quality or high purity quartz sand projects on a global scale. And maybe that's just us drinking our own Kool-Aid, but there certainly is the asset. Once again, it's close to civilization for those who prefer to call Perth civilization, and it's obviously adjacent to the VRX Silica project. And drilling is expected to commence later this year, and hopefully that's something that, with the help of government and this new initiative where it's been identified as potentially one of the critical assets to move on to that critical mineral list, and this is one that we can push forward, because that will be producing the upper end of the product spectrum type of materials, so silicon metal, semiconductors, solar panels, really important high value products for us. It's always good to end up with a bit of a timeline, and as you can see, the Suvo team will be exceptionally busy this year. We will spend most of our time in the office, I would assume, and on site, so very little Christmas, and hopefully the team's not expecting too much of a Christmas party because we've got so much to deliver. However, we've got a firm strategy and a clear strategy as to how we're going to push these various projects down the line, and obviously what we're going to be doing with Patong. We are engaging with the communities in which we operate, because that's a responsible thing to do. We are obviously working with the department and all stakeholders to ensure that whatever we produce at these sites are produced in a sustainable and efficient manner. Just from the corporate snapshot, I won't go over that. That's fairly straightforward, publicly available knowledge. But the corporate thematics for us this year will then obviously be to, as I said at the outset, target those critical and scarce resources, develop the project pipeline. That's simple. It's a matter of, we've identified the work that needs to be done, and we're going to be doing it. We've got the capital, and we've got the support, we've got the resources. It's about going out and doing the work. We are, however, looking at the opportunity to move our cost position down to the first quartile on the cost curve, specifically, obviously, at Patong. And embedded in all of this, and it's effectively the foundation that we've built for this whole company, and we are developing that, is an ESG strategy. And an ESG strategy is not, it's not more fluff, as some may see it. It's a critical part of getting your engagement right with your communities. It's a critical part of getting your engagement right with government. And then obviously, as a responsible corporate citizen, it's got to be an interwoven part of your bigger operational and corporate strategy. And to us, that's absolutely a non-negotiable. So not only will we be producing products into the green economy, but we'll also be doing that on a sustainable basis, which should be good news for our clients. And as I mentioned, to conclude, basically, we are focused on producing those essential decarbonizing commodities into the global economy. There's a huge local opportunity, but there's also the Asia Pacific sitting right on our doorstep, and we look forward to engaging with those clients.
Thank you, Henk. A very interesting. Well, let's do the peer comparison. Sorry,
I'm just gonna park it there. I think this is an interesting space, and I think there's an opportunity for some value to be realised out of Suvo. You have a look at the commodity, the number of projects in our portfolio, and obviously the operating nature. I will simply leave it there for the audience to consider.
Thank you very much, Henk. And yeah, nice one to leave on, because funnily enough, I've got a question here from Laurie, who asks, James Marsh Andromeda is justifying his market cap heavily on the benefits of halloysite. What's your portion with your deposits, if any?
We do have some halloysite in our deposits. However, if you look at the risk complexity, risk reward, whatever you want to call it, trade-off, halloysite, fantastic. There's a market for it. There's a fantastic opportunity there. To be honest, one of my mentors told me many years ago, in these kind of things, be second first. So I appreciate and I fully support what James and his team's doing, and they're really doing the hard work. They've been at it for a really long time. For us, Suvo is pretty much focusing on that niche where we moved from a traditional space where it's the coating space and potentially lower value offerings to something which is high value offerings such as ceramics and metakaolin. So I don't think our board and our company is ready to move to that position on the risk reward spectrum just yet. If the technology proves itself, if the deposits prove themselves, then obviously if it's in the interest of our shareholders, we will support those initiatives with our assets as well.
Okay, we've run out of time, but I need to ask this. You said 5 mil to go down into the Victorian project. What's your time frame on that one for the upgrade?
So I always stick to what the engineers tell me, and they promised and committed, and
yep.
Pretty much gave us a commissioning by Q1 2023 calendar year. And that's what we're aiming for. If the stars align, we hope the stars align, but having been mining for a long time, they really do. Hopefully it could be earlier, but I'll stick to, I'll behave properly and I'll stick to what the engineers have guided me on.
Okay, Henk, Ludik, thank you so much from Suvo Strategic Minerals. It's interesting, and I wish you all the best with your projects, 4 of them, and we'll look forward to seeing you and an update later on this year. Thanks so much for joining us today at the NWR conference.
Excellent. Thank you, Kerry. Have a good day.